Good morning. KVITs, a step-by-step trading process checklist you can follow in your broker and expiration payoff chart drawn for the BITO example. First, we will analyze what a long put butterfly is. Short, a long put butterfly is a limited risk, limited reward option structure built with 3 strike levels, same expiry. Buy 1 put at the lower wing, sell 2 puts at the middle. All same expiry, equivalent, equidistant strikes. Maximum profit occurs if the timing finishes exactly at the middle strike at expiration maximum. You will find the 2 live example. You can inspect and replicate USA retail BITO weekly actual quoted premiums. Why BITO? Retail US traders can trade ETF options. BITO equal ProShares Bitcoin Strategy ETF expires are available. Snapshot used market data source. One used a public option chain snapshot September 26th weekly. This number below come from option chain data snapshot. Trade per share premiums options 2025. Underlining BITO spot price $20.24 at snapshot time. Strikes equidistant 0.5 spacing lower equal 19.5 by 1 into 19.502 into 20 put $20.46 contract for 2 by 1. Net cost debit 0 equal 16 per contract, $16 per contract, 0.49 plus equal 100. Maximum loss was net debit $16 if trade expires worthless. Maximum position equal 19.19 middle plus bid minus debit equal 20 plus 0.5 minus 0.16 equal 20 plus 0.34. CMEgroup.com a plotted and displayed the legs plus PL charts table peak at $20.22 and break even at $19.66 and $20.34. Source for the BITO options prices used. 3. The step-by-step trading process, how to actual place and manage this. Below is a compact checklist you can follow in a US broker that support multi-leg options. Fidelity, interactive expiry. For US retail, use BITO ETF weekly or monthly options if you want crypto exposure on US exchanges. Confirm liquidity and spread fast. Pick the center strike body. Usually pick the ATM or slightly OTM strike where you expect the ETF to land. Term butterfly example we used 20.00. Pick wing distance. Use equidistant wings, e.g. $0.50 plus from cheaper debit but smaller maximum profit, wider wings, larger maximum profit but larger debit. Check liquidity and net debit. Look a bid ask on each leg and the multi-leg price. Your broker quotes. Use a combo multi-leg order to get a single fill price. If spreads are wide, use small limits orders. Do not place a single multi-leg limit order. Enter the 4-leg combo. 1 long put at the rate of upper. 2 short puts at combos. Specify limit. Your calculator target entry price, e.g. 0.16. This prevents partially fills and legging risk. Position, size and risk. Decide capital per contract. Maximum loss per contract is the debit position size equal risk budget divided maximum loss per contract. Example, if you risk Martyr Greeks and fourth butterflies benefits from thin and lower Vega exposure. If you set up near ATM, they like falling fourth after entry. Fourth discrete. This decrease helps the legs consider fourth environment before entering. Exit rules. Close early if you reach a target, e.g. 50 to 75 of maximum profit. Of if fourth spikes against, because maximum profit occurs only at expiration, exactly at the bottom. If the market moves strongly away from the butterfly zone, limit loss to the net debit. You can also close earlier if delta moves. Make further rolling adjustment if needed. If price moves but you still expect a move back, fees and contract spaces. Accounts option quoted in dollar or share. Player for standard equity ETF options confirm. Fourth, institutional other platform notes products good for US institutions and those with futures accounts if you are trading via a US Bitcoin. Futures or CME. CME launched expanded Bitcoin options products. Deribit is the best crypto options venue, has liquidity and shows many live options price. 1,017,000 some jurisdictions including the USA in their restricted list. So US using Deribit, a site Deribit's restricted jurisdictions information. Short practically take away for most. Use retail traders ETF or US resident. Fifth, how to structure the bit. Tight wings, smaller width. Reduce net debit so break even. Sit closer to the body, easier to hit a small contract. And a model maximum profit $34. Pick near-term expiry. Shorter expiries gives faster theta, but beware of inflation approaches. Enter when fourth is relatively high sell premium. Target closing early, take partial profits. E.g. closing profit. This improves realized win rate. Use to avoid paying wide spreads with kill profits. Sixth, fees multipliers and final numbers. Example, net debit equal $0.16 per share, that is $16. Maximum profit equal 0.30, that is $34 per contract. Break even equal 19.66. Small capital. Source for price data used in the worked example 7. Visual diagram with what I plotted for. I produced a payoff charts and a small trade line showing the triangular profit zone centered at the 20 quoted premiums above and assumes expiry. Chart or table were generated from the same option chain snapshot. 8. Quick do's and do nots. Avoid legging risk. Size for contract shows that maximum loss is an amount wide, spreads are thin. OI, open interest. Ignore assignment risk. If short puts are deep, ITM, near wings, so risk limited. 9th, source and leave reference, quick, long put butterfly definition, education. Example, BITO options chain codes used for BITO ETF information. CME Bitcoin options and product pages. Options codes, restricted jurisdictions. Like, subscribe and comment. Crypto trade example. Long put butterfly. BITO trade process. Thank you friends. We will meet next episode.